Good afternoon. This is Bakes, Kevin Baker. Welcome to Bakes Takes, my podcast. It's Saturday, February 20th, and let's get right into it, folks. Number one, from Roaring Kitty to Dead Cat Bounce. I'll explain that. Number two, they've mopped up the kerosene. Your matches don't matter. Almost sounds like a country song. Anyway, number three, Congress beats dead horses. Now, PETA, no cats nor horses were harmed in the making of this podcast. So here we go. Why I do this, real quick. Bobby, Jack, my sons, they're in their 20s. And I speak to them, and I invite you to listen in. They were in college and business programs. They would fire questions to me when they were working on projects or going to interviews, and I enjoyed it. And then their friends would join in, and I've got 30 years of doing this. I was a broker in the '87 crash, so I've got the scars, and I hope some knowledge to impart. And my journey led me to read about 1,000 plus books, and was drawn to technical analysis because the technical people beat the fundamental people in the '87 crash. And so I read charts. I talk about price and volume all the time. I do a lot of fundamental work. I simply do it in a different chronology than most. Technicals first, fundamentals second. It isn't right or wrong. It just works for me. I read the things that maybe you don't want to. The Wall Street Journal, The Economist. I listen to podcasts. I devour relevant newsletters. I monitor what my Google alerts bring to my attention. And I point you to all of that. I always give attribution. But if you don't want to do that, know that I'm doing that work for you. I eat home cooking. I have no conflicts. I just talk about what I invest in and what I'm interested in. So, disclaimer, this is not investment advice. Please conduct and share your own due diligence. The more this is a community where we're putting more on the table than we take away, we're all going to make a lot more money and have a lot more fun, and it's already starting. It's really cool. Especially Mike, this week we had a lot of great fan mail, and do me a favor and play my son Bobby's first voice memo question, please.
Hey, Dad, quick question about the Reddit trend. Are we going to see more of this kind of team investing strategy moving forward, or was this just a flash in the pan?
I always love hearing my son's voice. It makes me smile. Bobby and everybody else, I'm going to be really blunt. Wall Street Bets and Reddit is a flash in the pan, and here's why. It's funny. I had these charts up before your question, and so the dovetail is uncanny. But this is the short squeeze data, the short interest data, as a percentage of the shares available for GameStop. And this is sort of Wall Street Bets in microcosm to me. It was over 100%, famously, of the shares outstanding, and we're now under 40. And so I talked about this in at the top of the podcast. They've mopped up the kerosene. Your matches don't matter, and I still think that's going to be a great country song. Meaning that, and I called it, weekend in Greenwich, where a lot of the big hedge funds are. Yes, you caught Melvin, a big hedge fund with $12 billion that's been around forever, very highly regarded. You caught him napping. And they were short an absurd amount of GameStop for a long time, and the risk manager fell asleep, and you squeezed them. And so once it got above 22, it was game on, and they had to cover, and it was painful to cover, but cover they did. So they're not dumb people. You caught them once, and everybody pays attention, and then you drive the stock to 483 from 22, that's going to leave a mark. And now, here's my caveat. It's Saturday. Most deals happen on Monday. Could there be some kind of crazy thing on Monday morning that CNBC talks about where some SPAC has merged GameStop with Epic, the maker of Fortnite, and everybody thinks 1 + 1 = 483? I mean, it's possible. I think it's highly unlikely, but GameStop is dead money to me, and I'll go into that further. The next one, okay, this is from Miles Zyblock. My eyes can't catch that. I think it's Zyblock. And he points out in a recent either LinkedIn or tweet, I forget which one, but God bless you, Wall Street bets. You managed to wipe out 20 years of cumulative short profits in about a week. It's uncanny how damaging this was to short sellers. And maybe that's your point, but my point is, everybody gets it. And they've recalibrated their positions accordingly, and I think it's going to be 20 years for the next setup like GameStop to appear. There might be one lurking around the corner, but everybody and his brother is looking for it. I doubt they find it because people change their behaviors. They just do. Now here's the daily on GameStop, GME, and it also gets back to one of my first points. Roaring Kitty, did a lot of great work that got the stock from, the single digits to 22, and that was the launch pad to 483. I wrote down even a dead cat bounce. By the way, that's a Wall Street term. I know it's kind of crude, but it refers to even a dead cat bounce. Dead cat will bounce if it falls from a great height. Well, 22 to 483 to $40 qualifies as that. So you could get a dead cat bounce. With all due respect to Roaring Kitty, 35 to 43 looks to me to be the floor. And I encourage you to go back to my YouTube channel. These levels that I've highlighted have been pretty good about limiting the damage from 325. So the bounce could go to 65.77. That looks like the ceiling to me. If you're on the YouTube channel, I've got red lines drawn here as these levels. I think that's where we go. So if you own this stock and are trying to decide what to do, if you're red, I think the chance of you getting back up to profits is very slim. And if you see 65.77, I'd get the sell tickets out if I own the stock. That's just me. Bobby wrote in how to combat FOMO and fear of missing out, as you know. And I wrote down, sit on your hands. That's easier said than done. When again, I mentioned that I was in the bar the other day, and 5 people had their phones out with their Robinhood accounts talking about a number of these stocks. By the way, they're not sitting at the bar right now, and they sure as hell don't have their Robinhood accounts out. So anyway, just sit on your hands. There's always another train coming. I've got 1,700 ETFs I go through every day. I own 9. That's all you need. I'm looking for a 10th, to be honest, but there's always something going on. And I go everything from the entire Nigerian stock exchange to shorting bonds to owning Bitcoin. I mean, it's all over the map. There's always something to do. You're not going to miss out on anything. Now, as a practical matter, I use I wrote down 5 to 10% above the base breakout. I think it's more than like 5. 10% is probably too much. So if something takes off without you and it gets 5% above the breakout point, just let it go. Because this is just me. Every time I have violated that and I've chased something, it's burned me every single time. I managed to be the top tick and a reverse, and I have to take my losses. So this is the ProShares short, 20-plus year treasuries. TBF is the symbol, Tomboy Frank. And I'll discuss this more later. This is the daily. And, I keep thinking that everybody sees what I see, but this to me is clear as day. On February 12th at 1681, it was the breakout. Period. End of discussion. To me, it's clear as day. I forgot to draw an arrow here. I'm sorry, Mike. And so 1765, I think, is 5% above that level. And I think I'm in at 1705. So that's how tight I would have it. Get there at the breakout. If you miss the breakout, again, there's plenty of other trains coming, and there's always something to do. And frankly, I hope I give you fodder. I hope I'm presenting ideas. I don't think any Merrill Lynch broker called anybody up this week and said, let's short the 20-year bond. So, I'm coming up with some pretty cool ideas. Oh, Mike, let's go to Bobby's next voice memo question, please. Thanks.
Hey, Dad, it's your favorite son, Bobby. A couple questions regarding crypto. When would you recommend buying Bitcoin, especially right now with prices for Bitcoin going up pretty rapidly? Is there going to be a bubble burst where we're going to have it be more of a discounted rate to invest in, or should we hop on the rocket ship right now? And will there be any other cryptos that have the success of Bitcoin? I know there's Ethereum out there, there's Dogecoin out there. Will crypto become the new way we interact with money?
I love my son, and especially when he trash talks my other son, Jack. Uh, but is Bitcoin the only crypto? No, it's not the only crypto. And I wouldn't use the term, I think it is a new way to interact with money. I think that's a fact, period. I wouldn't use the term bubble in this case. And I'll go into this a little bit more, but the digital gold aspect of this leads me to think you're not going to have you can have big corrections. There's no question about it. We've already seen it with this, but we're now at a point where this is sitting on corporate treasury balance sheets now. It is being really viewed as a alternative to the dollar. I keep going to the argument that the Winklevoss twins have brought up, which is there's $10 trillion worth of gold above the ground. You divide by the maximum number of Bitcoin, that's 21, and you get to a rough number of $500,000. Could the price of gold go down? Yes. Could those ratios be off by a big number? Possibly. So, but we're at 57,000. Now, we started this conversation at 32,000, right, Mike? Something like that. So I think you're going to definitely have corrections. I think you're going to wake up some Mondays and there's going to be SEC this or Congress that could drive the price down. And I'll get to that a little bit more. Now, as always, I go to the chart first. So Bitcoin look better than Ethereum to me. These are the grayscale Bitcoin and Ethereum trust, GBTC and ETHE. Especially at 15, where we bought the grayscale Bitcoin trust, it just looked classic, absolutely classic, even better than the Treasury short chart that I just talked about. And here we are at 56. So I guess I was in Bitcoin. This approximates the Bitcoin price. 15,000 Bitcoin now. Here we are at 56,000 plus. So the chart looked much better than Ethereum. That's one point. Let me go to the next one, Mike, please. All right, so here's Ethereum, the Grayscale Ethereum Trust. It's the number 2 crypto. It's 19% of Bitcoin's market cap. They're more focused on decentralized finance. I'm not an expert in any of this, but this is a clear number 2, a distant number 2, and frankly, the chart doesn't look as attractive to me, so I'm sticking with Bitcoin for now. And again, part of this ought to be a small part of your portfolio and a small part of your assets. You pick a number, 3, 5, 10%, whatever it is, but this should not be mortgage money or college money, in my view. So, and that's it with Bobby. I hope I've answered that. You tell me if I haven't. Charlie wrote in, another great fan of the show, very thoughtful, and he said, "How can Bitcoin be a currency with this volatility?" I'm paraphrasing a bit, but that's roughly it. Many people prefer the term crypto asset. And that's okay. You're not going into Starbucks and handing over your phone and paying for lattes with crypto right now. We have to remember this is only 12 years old. This was born out of the financial crisis, so crypto has a very short history, and there are growing pains with everything. Now, the reason I'm attracted to Bitcoin, one of the main reasons, is that the dollar is the alternative, and with very stark contrasts. And I'm going to segue into this. If you were fortunate enough to have missed the congressional hearings on GameStop this week, congratulations, because it was painful. But I sat through as much as I could, and I just think, take a step back. pompous politician after pompous politician came up with their inane preambles and their crazy questions, then demanded a yes or no answer. And I mean, I wouldn't let these people run a popcorn stand. So I didn't see any Winston Churchills there. I didn't see any Abe Lincolns there. It was unwatchable. And I told CNBC that, and they're not going to listen to me. They'll do it again. But these are our so-called leaders. They take the trillions of dollars of tax money that we send them every single year, and they constantly grow. No program ever dies in the government. Wall Street, the Washington real estate will never go down because the government constantly grows. The debt is exploding. It's just irrefutable. The debt is exploding, and the dollar is depreciating in our hands. If the dollar was backed by gold and was a stable store of value, I wouldn't be talking about Bitcoin, and I don't think anybody else would either. Okay, so that's why I think it can become a currency as time goes on, and the volatility is going to come down as we go from year 12 to 24 to 48, etc. You brought up in your second part of your question, could the government regulate Bitcoin, and is it a threat to central bank power? They could try to regulate Bitcoin. I don't know how you control a blockchain, which is in essence an abstract ledger. Do you shut down every server farm in the planet? I don't know how you would do it. Do you make it illegal to accept it? Okay, I guess you could do that. But does that betray their lack of faith in the dollar, that they're so threatened that they're doing that? I think that's going to be a problem. It is a threat to the central bank, and that's their main point. The central bank is a printing press, and that's the reason we're having these discussions, and that's the appeal of Bitcoin. It is above the fray. It can't be controlled by any one individual or any one government or any one central bank. They could try to rein it in. I don't see how they do that. Now, I do anticipate headlines, like I mentioned before, Bobby, that that could drive the price of Bitcoin down. It obviously has shown the ability to go down, but I think that, and frankly, the government, governments, plural, China is very far along in having some version of a cryptocurrency, and I have to believe there's a project somewhere in the Fed to address this. I mean, they read the same papers and listen to the same podcasts that we do. They can't ignore this. This isn't going away anytime soon, in my view. Number 3, you asked about the Biden infrastructure bill. And I hate to be so cynical, but I also want to be honest and transparent. I said, see, number 1, I'm unimpressed. There will be an infrastructure bill because you can't stop Congress from spending money and wasting money in many cases. Now, the infrastructure bill probably will be better spent than most of the things that Congress does. So I think it will happen. But I put the chart here of PAVE, P-A-V-E. The U.S. Infrastructure Development ETF. And what did it do? It popped after Biden's win. So it's up. It's a good-looking chart, but I think that it is largely expected. Oh, by the way, this is going to be after he tries to get through some high percentage of his $1.9 trillion stimulus bill. With the stock market at new highs, we're going to put another $1.9 trillion into the system, and then address roads and bridges and what have you. So PAVE is the best looking chart I found right now. It's on my monitor list, and I'll alert you if I buy. I'm not buying it right now. Charlie, I hope that answers your question. And of course, he said, I got to get a shameless plug-in. Great call on URNM. Thank you. I appreciate it. And I still believe in the uranium story, and more on that later. So here's my take. Bitcoin is the leader in the clubhouse and elsewhere. Tesla didn't buy Ethereum for its balance sheet. It bought Bitcoin. And I would suggest you decide what percentage of your assets you're comfortable owning in Bitcoin. Keep it small. Buy a tenth, a fifth, a third, something like that, or so on the down days, and then sit on your hands, which also points to your FOMO question, and you're going to have red days. You can't act like this is going to be going up to the right forever. It won't. The world doesn't work that way. Charlie, even with the volatility, I still think Bitcoin will be a currency at some point, and I don't see how the government's going to regulate this, but they're likely to put out headlines to try. Fighting FOMO, there's always another train. And Wall Street Bets Reddit, flash in the pan might be too harsh. I think they're going to be here for a long time. I think it serves a purpose. I think exchanging, that's what I want to do. I want to exchange ideas. I want to do it in a civil fashion, which I encourage. But my point about flash in the pan is it's going to be very hard to find the next GameStop. And so I would suggest you recalibrate your expectations. They're not going to find one anytime soon because people have covered their shorts and gotten out of harm's way as best they can. People aren't stupid. They react to things that go from 22 to 483. Infrastructure, I think it's already in the prices, and I would not be shocked if we bought the rumor and we sell the news, and you see the Caterpillars and the aggregate companies and all these roll over a bit if they ever signs a infrastructure bill into law. Oh, and Charlie, Mike likes the shorter videos, so thank you for your work on that. I really appreciate it. And I'm working hard to present something worthwhile daily. If you don't hear from me, it's that I just didn't find anything that was impactful. So if it's worthwhile, I'm going to put it out, and I appreciate the feedback. And please share this with your Robinhood and or your Reddit Rebellion friends. Send your other stocks, ideas, and I'll offer a strategy for them as well. Please stay tuned. Next, we'll talk about themes and groups, my themes and groups. And this is a copy of my tweet on Friday. And this is the monthly chart of the ProShares short 20-year treasuries. So as the name suggests, it shorts 20-plus year bonds. And I've been saying for a long time that bonds suck. I think one of our first shows, Mike, right? I laid out this week in a 3-minute video, my pretty simple rationale for bonds going down. And it is this: every time money supply goes up like this, and this is the most extreme example ever, and gold acts like it has, interest rates go up at least 250 basis points. That's what's happened. It might be different this time, but I doubt it. And this chart sure suggests that it's not going to be different this time. My tweet on Friday, that's a breakout, folks, and it's pretty. This is a 2+ year downtrend that is broken to the upside on big volume. It's very near the lows. Interest rates are going up. Bond prices are going down. And full disclosure, obviously, I have a position. So, keep an eye for my tweets. Take a look at this chart. Argue with me if you want to. But I just think that interest rates are going up, bonds are going down, and I want you positioned accordingly, or at least I'm going to be positioned accordingly. You tell me how you think you should do it. And this, I can't believe I'm going to say the sentence. Nuclear power is now environmentally friendly, and that's a story in the New Yorker. I mean, that's a pretty, mainstream publication. And the uranium bull case is they showed a chart here of Cameco, which is the number 2 position in the URNM fund ETF. Since election, it's up 85%. And nuclear power is now ECG green, centrist political tailwinds. So people are, and I hate to bring this up, wind and solar has not worked for Texas, and nuclear has to be a part of the solution if you're aiming to be carbon neutral or carbon free at some point in the future. And nuclear isn't like it was in 79 with 3 Mile Island, and this all is good for uranium. So stay the course, in my view. This is from Cryptopedia. Gemini, the Winklevoss twins company, put this out. I think this is on LinkedIn, and I put this link in the show notes. And go to the show notes. There are some really great stuff that I send you to. This is a 5-minute read, and if you have questions on crypto, it is, how does Bitcoin work? And I think it's pretty good. I won't go into it here, but I point you to that as a great, especially if you're brand new to Bitcoin. Take a look at this, read it, and I'd love to get your feedback. I'm going to do a lot more of this. Podcasts of the week. On the Tape podcast, Danny Moses, who, Mike, he was he was a player in The Big Short. And if you can dig up the actor that plays him, I can't remember who it is. But anyway, that's his claim to fame. And the other two hosts are Guy Adami and Dan Nathan. They're on CNBC all the time. I like them both. Guy Adami seems to me like a brother from another mother, which means he's kind of a smartass. And then Joe Saluzzi and Sal Arnuck are the guests. Yeah, Mike.
So that was Ralphie May. I hope I'm pronouncing that correct.
Okay. Yeah, he was on the trading desk of one of the firms that was short. I don't know, just kind of cool. Thank you very much. So the whole show is great this last week, and again, there's a link in the show notes. But the last 20 minutes are really interesting, where Joe and Sal suggest that payment for order flow be eliminated. And after this farcical congressional hearing that we saw, and the anger that Robinhood is taking on, payment for order flow might be in trouble, and that means Robinhood's in trouble because that's how they get paid. And that's why they offer it to you for free. So keep an eye on that. And they stated, and I don't know if they were kidding, but that Bernie Madoff is the fellow that first proposed payment for order flow. And so that's kind of 3 strikes and you're out. Don't know if that's going to happen, but keep an eye out for that, please. Next podcast is Scott Galloway's The Professor G show. He's an NYU professor. Very thoughtful guy. And I don't talk about individual stocks too much, but I thought this was, I thought it would overlap with a lot of your interests, so I decided to bring it up. At 3 minutes, he talks about Apple likely buying Peloton, and makes a pretty compelling case that, number one, they can afford it, obviously. They've got billions of dollars in cash. And number two, that it's the same sort of rationale for why they want to get into mobility, let's call it cars. That if they can get you your rapt attention for another 30, 40 minutes a day, and have you enveloped in their ecosystem, iOS, that's good for them. And it makes a lot of sense when he puts it like that. So keep an eye out for that. And if you own Peloton, do with that what you will. And then at 40 minutes, he says, get to HQ. And this is directly at my sons and their friends in their 20s. You're in your first job out of college, get to headquarters and be in front of your boss if you can. Now, if they won't let you, COVID keeps it away, or you have reasons why you can't do it. Obviously, that's a different story. But if you can get to HQ, do so. Bill Parcells talked about players. If you're in the training room, I can't see you, so you're not going to get playing time. I'm paraphrasing, but people go by what they see. Zoom doesn't cut it. And so if you can get to headquarters and be in front of live human beings that impact your career, I would recommend you do so. So my take is get to HQ, and my other take is diversify your accounts away from Robinhood. I think there's a lot of fur flying there that's going to be a problem. Next, Reporters of the Week. This is Marty Macri. I hope I'm pronouncing his name correctly. Oh, by the way, it's Dr. Macri. And the reason why I bring this up is that he's a professor of the Johns Hopkins School of Medicine and the Bloomberg School of Public Health, the chief medical advisor to Sesame Care, author of Price We Pay. Go back to the top, Mike. Sorry, I just want to see the headline and read it. Great. This is what struck me. Okay, this is the Wall Street Journal op-ed. We'll have herd immunity by April. I haven't seen this anywhere else. And if you read, I'll go into that later. COVID cases have dropped 77% in 6 weeks. Experts should level with the public about the good news. And I bring this up because we're barraged with cases and deaths and double masking, and that's one view, but here are the facts. If medication / case is 77%, we would call it a miracle pill. That's Dr. Macari. 55% of Americans have natural immunity now. 15% have had the vaccine. Gottlieb, I guess he's the former FDA head, is predicting that we'll have 250 million doses in 150 million Americans, roughly half by the end of March. Right now, the population fatality is 0.15%. And I put in my notes, Lady Gaga, shut up, because I watch CNBC all the time, and it seems like every 7 minutes there's this ad with Lady Gaga and others, talking about the good housekeeping seal. I don't know, that isn't exactly right. That it's when you need to have this seal to feel safe to go into schools and restaurants and what have you. And folks, it's safe right now. Obviously, be careful around your grandparents if they have COPD. I understand that, but here's my take. Our lives and this country are good and getting better. Now, for stocks, this could be paradoxically negative. My reasoning is stocks discount all this good news, and now it's here. And we have the aforementioned Biden stimulation with the infrastructure bill, and then with herd immunity showing up, all this pent-up demand, and it continues to drive interest rates higher, bonds lower, and I think that as bonds become better competition for stocks, we're going to have a problem. I don't think it's cataclysmic, but I think it just has to be part of your mindset as we go through the rest of this year and going into next. So, all right, that's the show. Good show, don't you think, Mike? Please also subscribe to my Bakes Takes YouTube channel. The audio is the same, but the charts that I reference are on the screen. Follow us on Twitter at BakesTakes_ and other social media. Please use your voice memo app. Bobby, thank you. Tape your questions and email them to bakes@bakestakespodcast.com or write in if you'd prefer. I'll keep you anonymous if you'd like. Thank you for listening. Mike Wilson is my producer. Mike, thank you as always. Have a great week. This is Bakes, and I've got two things this week. Brad Paisley, No I in Beer. I really recommend you see the video. Peyton Manning in it is worth the price of admission. And for much needed levity, this is an old one. Best of Ralphie May. May he rest in peace on ESPN's More Sports. It's pretty damn funny, and I hope you enjoy it. I'll see you next week. Take care now. Bye-bye.